Welcome back, stock market investors. What a crazy time to be investing in stocks. The market is just bonkers right now. So in this video, I'm going to talk about investing in the stock market for beginners in 2020. First, I want to do a quick plug for my LinkedIn network. So LinkedIn is going crazy, guys. LinkedIn is the next powerhouse social network. I'm posting multiple times about investing over there, so find me on LinkedIn. And let's go nuts. Name is Brad Kellner. Find me on LinkedIn. So in this video, I want to talk about 3 core concepts for beginning investors in the stock market. These are critical concepts for you to grasp to do well over the long term as a stock market investor. So also, if you're a visual learner, I'm going to put those 3 concepts down in the notes. Take a look at those. I'm also going to throw down there a few companies that I'm really intrigued by at current prices. It's March 11th, the price today. I'm really intrigued by these companies. I think they're worth taking a deeper dive into. So, concept 1, the value of a stock is not the same as the price of a stock. That might seem weird. So let's break that down. What is the value of a stock? Well, a stock represents a partial ownership stake in a real business, okay? And so most people calculate the value of a stock as, all of the cash flows that business is going to generate in the future from now until Judgment Day, discounted back to today at a proper discount rate, okay? So when you own a share of a business, you are entitled to a representative portion of those cash flows over the life of the business, all right? Now, so that's the value of a stock. Now, the price of a stock is what people are willing to pay at any given time for a share of ownership in that company, right? Now, when you deal with an auction-driven market like the stock market, what people are willing to pay is going to fluctuate based on, whether people are optimistic about the future of that particular business, about the stock market in general, or whether they're pessimistic. Like right now, there's a potential pandemic happening. We're kind of early. We don't know what's going to happen. There's a lot of businesses taking precautionary measures. We don't yet know how the potential pandemic, the fears around that are affecting the bottom line of these businesses, because businesses don't have to disclose their statements, financial statements. They only do that every quarter, every 3 months. So we don't yet know, because we haven't seen the financial statements since this fear has been in effect. So the value is kind of a rational calculation of, and it's not just one calculation, it's actually, there's not one future that can happen, right? There are multiple futures that can unfold for each business, depending on all of these different variables, right? Like, who would have predicted that we'd have a potential pandemic going on 6 months ago? So there's things that can unfold in the future that we have no awareness of right now. So when you value a business, you have to take probabilities of different outcomes into consideration as you determine, okay, what are the likely outcomes of how this business is going to generate earnings and cash flows in the future. So that's how you come up with a value for the share of a company. Obviously, price is auction driven. The value is definitely a factor, but there's also the human factor as well, human emotion and that can really, exacerbate the prices upwards, or it can trend them downwards quite a bit above or below the actual underlying business value of the stock, okay? So that's the first thing. The value of the stock is not the same as the price of the stock. And it's really important to have some idea of what the value of the stock is to know whether you should buy the stock, whether it's an attractive price in the stock market, or whether it's, not an attractive price, whether the price is much higher than the value, or whether it's close to the value and there's not a compelling move to make either buying or selling. So that's the first concept. Second concept, meaningful change in a business usually takes years to materialize, okay? So say there's a business that's available where you can buy a partial ownership in that business for quite a bit below what the actual value of that share is. One of the hardest things about doing that is you might buy a company, you're really excited, you get it at a discount, right? Say it's half off. Say the price is 50% of what you estimate is the actual value of that stock. Now, the biggest challenge of that is it can take years for the market to price a share of that business more in line with the value. So it could take multiple years for the price to come up to match what the value is. And patience, as humans, patience is very challenging, especially when you're watching other people make money off of other companies. You're watching the ticker go up and down. The stock market, everything about the stock market is designed to get you to be active. But the reality of the situation is that wealth transfers from the active to the inactive investors, from people who are constantly buying and selling to people who are holding and waiting for the price of that share to come up to match the value, okay? So patience is incredibly important in investing. If you look at Warren Buffett, early on, there would be years where he wouldn't do anything, right? Because there's nothing, it's not all that common for the market to misprice a stock within your circle of competence, within what you know. It's not all that common for there to be a mispricing in the companies that you understand. So it's really important when that does happen to be able to recognize it and to be able to act on it, okay? It's really important. So number 2, meaningful change in a business takes years to materialize, and people are impatient. That's a very big challenge for investors. So it's important to kind of understand what your temperament is, and that leads into the third point. Concept 3, it takes a rare temperament to be able to outperform the market by picking stocks, okay? There's a reason Warren Buffett advises people to invest in the index, to just buy the entire market. Okay, when you invest an S&P 500 index fund, for example, you own all of the companies in the S&P 500. So you don't have to try to pick which ones are going to outperform the market as a whole. Now, it takes a rare temperament to be able to outperform the market, and there's a few reasons for that. One is you really have to be rational in order to outperform the market. And there are so many ways that humans are irrational. Just one example. So humans have this thing called a confirmation bias, which means once we have an idea about something, we tend to seek evidence to support that idea. And we tend to discard evidence that goes against that idea, which makes it very hard to change our mind about, say we buy a company, right? When we buy a company, we tend to like it more, right? We want to believe that it's going to do well. And so we look for evidence that that decision to buy it was a good decision. And we tend to discard evidence that runs counter to that decision. So that's just one bias. There's a talk that Charlie Munger did at Harvard called The Psychology of Human Misjudgment. And he goes through, I don't know, maybe 20 some biases that he's identified in human beings. The book about him, Poor Charlie's Almanac, is another great place to read about biases that humans have. So that's just one thing that is really important to have in your temperament. And you don't necessarily need to be born with it. You can develop it. But it takes constant work to develop rationality, which is, it's an essential quality to be able to pick stocks in a way that you outperform the market. I already touched on patience. Patience is incredibly important. Harder to develop, probably. Some people have a natural temperament of patience. I believe that I have more patience than most people. It might be a clue that I have more patience, that I talk slower. And just as a side note, if it's hard for you to watch these videos with the speed that I'm talking, I think you can watch them at 1.5 or 2 times if you go into your YouTube settings. That might be a good tip for you. And then the last one in terms of temperament is, Charlie Munger and Warren Buffett are learning machines. They're constantly learning. And what really helps them constantly learn is that they are always curious. They're perennially curious about why things are the way they are. So in investing, it's not like you can figure it out or crack the code and think that that strategy is always going to work. The only constant in investing, really the only constant in life, in the world, is change. And so if you're not constantly curious, it's going to be very difficult for you to evolve as an investor. And over time, continue to pick stocks in a way that you can outperform the market index. So that's it, guys. Those are the 3 concepts for beginners that I think are really important to integrate and to look at yourself and really kind of gauge where you're at with those things. The first one, if you believe that, maybe you believe that the market is always efficient. Okay, if that's the case, you're probably not going to want to get in the stock picking game. Because at the core, you don't believe that it's possible to beat the market by picking stocks. So like I said, I'm going to leave those 3 concepts down in the notes. So for you visual learners, you can take a look at those. I'm going to put a few stocks down there that I think are really interesting to look at based on their current price, where I think they're, a third or more off, below what their actual value is. And like I said in the beginning, check me out on LinkedIn. I'm posting multiple times a day on investing. I'd love to hear you guys, get your voice in there in the comments, see what you think. Always looking to learn. That's one of the main reasons I do these videos. Teaching is an incredible way to learn. And when you guys leave a comment, when you ask a question, it really helps me keep going with the learning process. So anyway, thanks for being here, guys. Leave a comment. Let me know what you'd like to see in my next video, and I'll see you next time. Bye-bye.